Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about a dividend growth stock that's extremely undervalued. I own shares of this company, and I'm up, I think about 5% or 8% or something like that. And I'm looking to buy more shares, and I'm probably going to do it with options, sell cash secure put, and I'll show you some of the plays that I'm looking at. But the stock that I'm talking about is Comcast Corporation. Right now it's going for $38.54. It has a PE ratio of 9.14, which is very low, and a nice dividend yield of 3.22, and it is a dividend growth stocks. So if we go here to the dividends, we can see that um, over the, what is it, past year, it grew the dividend by 5%, and the 5-year average has been around 9%. So you can see it has been growing dividends. So if we look at the fast graph and take off the price of the stock of Comcast, you can see our earnings been growing very nicely, double digit rate for the most part, except in 2016 it had just an increase of 7%, but then continue to grow it at double digit rate. And then, of course, in 2020 with COVID and everything, it dropped earnings by 17%, but picked it right back up at 24%. And it gave it, the company earned higher earnings than what it did in 2019, so which was very good on their part there. And then analysts are expecting, a mid to high single digit earnings growth of 6% in 2024 and 7% in 2025, and then expecting double digit growth in 2026. You can see here the company has a A minus credit rating, and it has fairly stable long-term debt to cap ratio. And you can see here the blended PE at 9.45, and in the long term the company normally trades at a normal PE of 21.8. I think that's extremely high. I think PE of around 15 to 17 is fair for this company. So now we put the price back into the chart and showing the time periods around 10 years. You can see here the company normal PE over the past 7 years or so has been around 15 to 16 PE ratio, and right now we have it under 10. So extremely undervalued based on normal multiple. And you can see here earnings expected to grow higher. And if it were to revert back to a normal multiple of 15, you can see here you can have a total annual rate of return of 32.5% in the next 2 or 3 years, over 100% return, your capital, your hard-earned money. So we're going to look at operating cash flow. Can the company continue to pay its dividend? And yes, it can. Operating cash flow covers the dividend very nicely. It gives it a payout ratio of 16%. And free cash flow, the company as well is able to cover the dividend around 35%. So you can see the company, Comcast, is able to continue to pay a rising dividend for its shareholder. And if we go to this performance page here, you can see here the last increase was 7.55, so it has been dropping slightly in the dividend growth, but I expect them to continue to grow it at that rate, at a nice 7 to 10% rate for the next few years, and hopefully maybe by 2025, 2026, and grow it back again in double digit rate. And forecasting long-term growth, you can see here 4 analysts are expecting a 7.5% annual earnings growth for the next 4 or 5 years. And you can see here, if the company were to revert back there, you could have 18% annual rate of return. And something I like to do here in fast graph, I go to normal multiple and I look for the lowest multiple here. So you can see here the 20 years about 21 PE, and the lowest one is 1 year around 10.3. So this is saying that the company for the next few years stays at around the 10 PE, you could still have a nice return. You can see here at 14.33%, which is great annual rate of return, even if it just stays around the 10 multiple. So that's great. That just shows you how undervalued this company is right now. And if we look at some of the other analysts, you can see here in Schwab, Comcast, you can see here Morningstar gives it a 5-star rating with a wide economic moat, which is really good. And if we go into the report, you can see here the 5-star rating has a fair price of $56 compared to this closing price of April 25th, which is at $38. Right now it's at $38.53. And you see it's undervalued based on the fair price. Another thing I like to look at, if we scroll down here, is you can see here earnings are expected to continue to grow based on Morningstar analysts. 380 for 2024, $4.09 for 2025, and $4.80 for 2026. And the dividend expected to continue to grow as well. And then price to sell also, as you can see here, is very low at 1.5. So that's very low price to sell ratio. Another thing I like to look at here, if we go close this out and go to CFRA report, they have a price target of $50 compared to the $39.27 as of May 17. It gave it a buy rating, a 4-star buy rating, and it has a 3-year projected earnings growth of 8%. And it has a credit rating of A-, which is real good. And you can see here, earnings are expected to grow here. You can see it's been growing earnings, continue to grow earnings. 2024, they expect $4.24, and 2025, $4.55. So earnings are continuing to grow for this company. So this is why I like Comcast right now. Now, if we look at the chart here, you can see here, if in the weekly chart, this is the 1 week chart, there's been strong support in this $34 area here. And the next support will be around here, the $30. At $30, I would definitely be buying more shares. But for those of you who don't have shares, I think now is a very good time to be picking up shares, because I see this daily bar here. This right here looks like an ending bar of ending downside. If we scroll to other bars like that, you can see here, this is a big green bar. It just took the price higher. There was other ones here. Big green bar took the price higher. Here's a nice good size green bar, took the price higher. So this is what I'm seeing here with this big green bar. I think this takes the price higher. Sure, it could go maybe down here or something, but eventually it's going to take, this is strong buying support right here. So that's what that bar tells me, is big, strong buying support in this $35, $36, $37 range. Big, strong buying support, which should bring the stock higher. The next level, of course, is this $34 range. And what you can do, if you go to your trading account and you can look at the option for Comcast, what you can do is buy or sell October 18 puts for around $90 to $96, so maybe around $93 per contract. Remember, each contract is worth 100 shares, so you'll be spending about $3,500 for this contract. So maybe one lot of this, and you make $100 while you wait for a better opportunity. I think this is what I'm going to probably be doing. So one contract at 35, and if I get a sign, that'd be great. Or if it does get in the money, I could roll it further down and maybe get even a better price. But I think this is a good buying opportunity. You can see here on the 3-month chart here on Comcast, right? It falls right into this $50 range, 50 moving average, 50-month or 3-month moving average here around the $35 range. You can see that's where the support is. So if it hits that, you can see it hit it here and it bounced. It hit it here and it bounced. It hit it here, it bounced. Hit it here and bounced. So this is a strong support area. Of course, this is 08, 09 crash here. So it kind of fought that area and then it crashed, but eventually it took over. It bounced there, and then it just continued higher there. So I kind of expect kind of the same thing here, bounce around this $34, $35 range. This is why I'm looking to buy more shares at that price. But I think right now is definitely a good buying opportunity for Comcast to buy more shares of this stock. You can see here, earnings expected to continue to grow, and right now is undervalued based on the things that we just talked about. So if you guys like this video, make sure you hit that subscribe button. If you're new to the channel, make sure you hit that like button and subscribe button to this new channel. And thank you for watching. I'll see you guys in the next one.